Hello, my name is Thomas Krallo and welcome to my YouTube channel, where we talk all things trading, money and finances in general. Now, this is going to be the first lesson of a 10-day Learn to Trade challenge. So I'm finally doing it. I am finally putting together 10 trading lessons that will include incredible tips for both beginners and experienced traders. I have been trading for the past 7 years, and this YouTube channel is going to be dedicated to sharing my experience, talking about my strategies, about money in general, about long-term investments and short-term, hardcore, super risky day trading, and so on and so forth. So please subscribe. There's going to be a lot of interesting videos coming out. And already tomorrow there will be lesson number 2, which is going to be about the most common mistakes made by beginner traders and any traders in general. So that is going to be also a really interesting topic. So once again, subscribe and hit that bell icon so that you're notified tomorrow when I make the next upload. Lesson number 1. And in this lesson we'll discuss really basic things of how to start, how to get into trading correctly. There are a lot of people who are trading and maybe even somehow successfully, but that could actually benefit from this information as well. Me personally, I was not self-taught, so I cannot, put that badge on my chest saying that I was self-taught and, I've been developing this or that system for the past 20 years. Not at all. I was taught by my mentor that I met more than 7 years ago now. And so trading, and especially day trading, can be and is extremely dangerous and can be very difficult, and any trading. It is just a generally believed myth that trading is so simple, which it's not. So how to get into it? I mean, if you want to be a doctor, you can just go to the university and study countless years, spend countless money, and then you'll become a doctor if you're lucky. However, in trading, where to learn it? What should you start with? And I've been thinking for a while, how should I put this together and what would be those basic first steps? And quite honestly, in my personal opinion, the most basic first step is understanding whether you want to trade actively, so day trading, or you want to go into a more professional trading, which of course it's called professional, or you can also call it institutional trading. So let me basically really quickly cover the difference between day trading and professional trading. Day trading is, and actually day trading can be professional in my personal opinion, but all right, that's just the way these things are called. So day trading is something that I've been doing for many years, for actually the past 7 years, and that is super active, hyperactive trading, when you have a bunch of entries per day and you are trying to predict almost unpredictable things, those super small tiny movements, as you could call them, those radio frequencies on the background, on the general grander scheme of things, and you're trying to predict those super small tiny moves, and you're trying to benefit from them and profit from them greatly, simply because you are using high leverage with day trading, unless you have a lot of money in your trading deposit, which most of beginners don't. So we are forced to use a lot of leverage, and we are trading products like CFDs, contracts for difference, futures or options, or even worse, which is Forex, and so that's something I'll probably talk about in other lesson or somewhere along the way of my YouTube channel development. But Forex is, in my opinion, just a really nasty place to start, even though so many people actually start with Forex because Forex is super popular and so well marketed. But there are so many other markets and products that you can trade as a beginner, and you will have a lot better success rate than with Forex. And there are a few technical reasons why that is, and primarily it's because of the market data that you're getting. It's not that precise as, for example, if you would be trading some indice, for example, futures on Dow Jones Industrial Average, or the futures, or at least mini futures on S&P 500 or DAX 30, which I love to trade personally, and so on and so forth. But that is something that we'll leave for another lesson. So going back to day trading in general, It is a very hyperactive kind of trading, and when I'm actively trading, I'm trading from around the pre-market time, which is around 8 to 9 o'clock, and then I'm trading the main session, and then sometimes I stick around for the evening session as well. So it is pretty much a full work day, so sometimes it's more than 12 hours of work, so you're just constantly in there working. But of course, in the very beginning it's not necessary, and this is just a professional level. When you're a full-time day trader or trader in general, it's a serious job. It's not like you're just sitting there by the screen somewhere in Miami under a palm, eating banana, drinking a margarita, and just doing a few clicks and making $3 million. No, that's not how it works, even though so many fake gurus actually portray this business in this unrealistic way. So day trading, once again, super hyperactive, a lot of work sitting there by the screens, and there is a lot of risk simply because there is a lot of leverage, meaning that you have, for example, $5,000 in your trading account, but you are actually entering into the market with a lot more money depending on your leverage size. So that, of course, entails high risk, meaning that if something goes wrong and you're not using correct risk and money management, you can lose all your money quite quickly. And of course, it's a lot more difficult to accurately predict super tiny moves rather than bigger moves, which leads us into discussing what is professional trading. And professional trading is more of taking the bigger moves, so long-term investments, things like maybe penny stocks, which I don't personally like very much, but okay, that's just personal preference. Then of course just general stocks, and maybe gold or oil and these kinds of things that you see on the news that the price is dropping, and you are thinking that, well, politically and blah blah blah, so you're tying in the fundamental analysis into it, not that very much technical, but somehow technical as well, and then you're basically investing money long term, and your positions might last anywhere from a few weeks to a few years, and that is a nice type of trading. And I am doing this kind of trading. I do have a stock portfolio, actually 2 stock portfolios, and I have a cryptocurrency portfolio, so I am diversifying my investments all over the place. My day trading is actually just the fraction of what I'm doing with my money in general. Now, and when you have those stock portfolios and you're doing more professional type of trading, so long-term investments, they are more stable. So there is somehow potentially less risk. And let me just turn down Bloomberg here a little bit. All right, there we go. I'm just in the process of trading, recording videos, and enjoying life, and so it can be quite challenging sometimes. So yeah, when you are having those kinds of big portfolios and you're managing less risk, maybe you're reducing your exposure and you're hedging your positions, and I'm not going to be going into too much detail on what is a hedging a trade, and then blah blah. In this case, of course, there is a lot less risk, and a lot of my portfolios, I just keep them. I look at them sometimes. I keep my eye on the news, on the fundamentals, what's going on in the world, and if I have some specific, super specific, tiny new companies that I invest in, maybe some startups, I do have a few of those, then of course you have to keep an eye on them. But again, it's just basically maybe once a week or a few times per week I do keep an eye on things that are going on, and I have a special screen here, which is your left, my right, that actually has a few charts of the companies that I have investments in. And this is great. So you have a lot more free time and you're doing investments, so you're making money, and of course you are collecting dividends. That's another thing. So when you have some stocks that actually pay dividends, and one of my stock portfolios, one is in US and European stocks, and another stock portfolio is in the Russian market, which might sound quite strange for some of you, but yeah, I have a stock portfolio of Russian companies, and in my opinion those are from certain angle a bit better than US stocks or European stocks, but in the way of the dividends, because the dividends in Russia sometimes reach 10%, 12% per year, so that's a lot. But here is the problem with professional trading and all these kinds of long-term investments, is that you need a lot of money to begin with. when you are trading professionally, you might expect to make something like 20 to 30, 40, or if you are super extremely lucky, then 50%. But me personally, I've done it for a few years now, and I did not see these kinds of returns. I did, I think, 22% in 2018, and I did 27% in 2019. So I did do a lot of work, and it just wasn't that very interesting. So if you are, and that's already together with the dividends. So, and I mean, it's not that great. I mean, if you're looking for a passive income and you just don't really care about making money and you want to park your cash so that inflation does not affect it too much, then that might be a way to do it. But if you want to get rich, and well, I shouldn't really, this sounds quite bad. If you want to make a lot of money relatively quickly, then professional trading is for you only if you are ready to start with at least $250,000. So 250 to $500,000 would be enough, and it would actually be interesting in terms of money. So the annual return in terms of percentages would be quite low, but at the same time, the money aspect, the amount of actual dollars that you're making, would be quite interesting. But again, if you have $5,000 or $10,000 or even $20,000, and forget about trading deposits of $500, then it's completely meaningless. So you'll be sitting there still doing a lot of research and trying not to lose money, because you can still lose money with even professional trading. And let's say you have $10,000 and you'll make, I don't know, first year maybe you'll make, with no experience, I don't know, 20% income. You'll be quite lucky to make 20% income. And then what? So you've made around $2,000, and that's before taxes. And that's about $200 per month, a bit less. I mean, is that really that very interesting? How many years is it gonna take you to become extremely rich? Well, a lot, a lifetime, or maybe a few lifetimes. So I'm not really sure why people start with professional trading right away. I mean, people who don't really have a lot of money. Me personally, when I started trading 7 years ago, all I had was around 15,000 euro, which is, at that time, it was around $20,000. So, and my mentor, he told me that you have two choices, and that's what I'm telling you right now. You have two choices. But he said that if you're gonna go the professional way, you'll have a lot more free time, so going to the gym and enjoying life, perhaps, if you can afford it, but you're not gonna be making much money. And yeah, sure, there are situations when, for example, Tesla, you know, this super bubble on steroids, which I don't really understand. I've never held an investment in Tesla, even though I know that it's quite volatile. It's just jumping back and forth. But this bullcrap with Elon Musk basically tweeting things like my stocks are overpriced and then they're just dropping, and then nothing is really happening, but the stocks are climbing. This is just belief in Musk, that he's so great, that he's almighty, and that everybody is believing just in him. It's not the business model that people are believing in. It's just, in my personal opinion, I might be wrong, but I felt quite strange. I do really like to see other things in investment opportunities than just blind belief in a man. And sure, there will be these kinds of situations that you might have bought, I don't know, Tesla stock at $200 and then sold it off at $900. Well, I mean, and you would have, I don't know, quadrupled or even a bit more your total trading deposit. So you could have taken your $10,000 to $40,000 or $50,000 in a relatively short amount of time. And then if you would be just as lucky and somehow mystically, you'd be able to mystically predict the market and the stocks that are gonna do this incredible race on steroids, then you'd probably make a few million just even starting with 10,000. But this is something that is not that realistic at all. I mean, you can get, and I did get lucky with a few stocks that just exploded. But I mean, some stocks dropped in value, and then it means, I mean, this is what diversification means. Some skyrocket, some drop, some disappear. Well, not disappear, but I mean, drop quite low. And then when it all evens out and you see that from 20 of your companies that you've invested in one of your portfolios, some increased like 200%, some dropped 30%, and blah, blah. And in the end, you'll have like 20, 30, 40% left per year. And that's pretty much professional trading. Now, day trading, on the other hand, is a lot riskier, as I've said before, and I will keep repeating this word because I want people to understand what they're getting in. It is incredibly risky. It is very emotionally straining. It is quite a tough place to be. This office behind me, I've spent here quite a few years, and let me tell you, 1 year was, in terms of my nerves and stress, 1 year was for like 10 years of a normal person, because I'd be just going nuts here. I mean, I did develop somehow relative strength, mental strength, and somehow I can resist all of these provocations and bad days, but it still is quite difficult. But at the same time, with just a few $1,000 trading deposit, you can make a lot of money, and very, very quickly. You need to be properly educated, and I hope that this challenge will allow you to understand trading from a more professional side a bit better. And if you've been trading already, then the tips that I'm going to be giving you the next 10 days will be beneficial, and you'll be able to improve your trading substantially. This is a very serious business. Day trading is a very difficult business, but you can make a lot of money with small amount of money. Once again, I started with about 20,000. It was a bit less than $20,000, and I've made a lot of money. I'm not going to be throwing numbers at you, but I'm comfortable. I made a lot of money, but I spent a lot of time on education. My mentor, who was a multi-millionaire trader, he is still working. He's from Switzerland. He's still working for a private fund over there, and quite honestly, I could not have done it without him. I mean, I have an average intellect, but I'm quite persistent. So if I'm doing something, then I'm gonna be doing it until my eyes bleed and my head just falls off and rolls away. So yeah, and this is the kind of approach that you should have if you want to tackle the markets in a professional way. And of course, you must be watching out for a few things that we're gonna talk about shortly in this lesson already. So basically, I know that I'm talking so much, but I'm just trying to explain it as detailed as possible. And of course, I won't be able to give you absolutely every single tip and trick. So I'm running free webinars quite often. So there's gonna be a link in the description below if you want to learn a bit more about trading and spend more time with me and talking about different strategies. Then click the link below and register for my free webinar. All right, so day trading, professional trading, day trading, extremely risky, but potentially high returns and making a lot of money quite fast. And long-term investment, this is something that is less risky, but requires a lot of money. And what I'm doing personally, I've started with day trading, and I made a lot of money, and then slowly I was progressing, and I am still in the process of progressing into professional trading. So I'm somehow my capital is slowly flowing to long-term investments. But again, you gotta have that money. And the next topic is about the types of the markets. So you need to be able to select a good market. So there are quite a few markets that can be quite difficult for the beginners, and once again, that's Forex. Forex, in my personal opinion, is one of the most difficult markets to trade. It is quite volatile, so it's quite good for day trading, and it is somehow popular, and there are so many tips and strategies out there in the internet, and 99% of them don't work on a long-term basis. I mean, sometimes they work, sometimes they don't, but if you backtest them for like 12-month period, then none of them will work, I guarantee that. Now, so you have to be choosing the correct market, and the best tip that I can give you in this first lesson is try something besides Forex. If you've been trading Forex, then try something else. Try maybe futures, try some indices, maybe ETFs, I don't know, futures maybe. If you are trading with money, then you'll probably need a lot of money to trade futures. Try mini futures, try CFDs, and try to play around with other markets, and you might be actually surprised that you will have better results because of more precise market data than, for example, Forex. Now, the next topic, and that is an extremely important topic, selecting a good broker. Now, I won't go into too much detail on this. I'll just say that there is a lot of scam in the world of trading, and you probably know that already. I mean, it's 2020 for crying out loud. I mean, you should be a able to understand that this business is full of bullshit and full of scam. And it's not just about fake trading gurus and people that are trying to sell you their trading courses, useless trading courses. It's also about the brokers. A lot of brokers, and unfortunately about 90% of all these sketchy brokers are full of shit. So the market data, and the problem with those brokers isn't just super high commissions, incredible, unreasonable spreads. If you don't know what spread is, then just Google it. And so on. So there are technical things that bad brokers do, and sometimes those brokers actually see where the majority of the stops are of the people who are trading with them, and they would actually be pulling those stops on purpose. So they would actually make the candle or a bar chart or whatever you're using, the candle, I personally use candlesticks, the candle would actually go a bit lower than in the real market, and all the stops in that area where most of the stops are would be pulled, and of course the broker keeps that money. So there are quite a few fascinating things that fraudulent brokers do, and you have to be watching out for that. You must select a good trusted broker, and you must ask that broker or research that broker. You must get live market data. A lot of brokers provide in-house market data, meaning that the data comes to their servers and then they might manipulate it, and something might change, or the data that they're getting are secondhand, and the data that you will be seeing on your screen will be tiny little bit different, but it's gonna be different. And when you're day trading, you must be very, very specific, and you must be very careful with what you're doing. And this job in general is it's extremely technical. Even me, for example, when I have an entry and I enter into a trade and I see that something moved off, so if I have to increase my stop for some reason, I just close the trade. I don't want to have an undue risk, an unnecessary risk. And in day trading, there is too much risk already. So it's very technical, it's very specific, and it can be very tedious. And when you have in-house market data, it's just a freaking suicide. And trading is a very sensitive job, and you must make sure that you have live market data. So the data that you see is actually the data that the real market is, so the guys on Wall Street see. So you must be able to see that kind of market data. Now, before we wrap up, a few more tips. I hope that I don't have to say it, but Forex signals or any kinds of signals, forget about that garbage. It does not work, it never worked, and it will never work. And I will not spend a lot of time on this because it purely just pisses me off. Please forget about Forex signals and any signals in general. And the same goes for chat rooms. There are so many chat rooms around the world. I don't know, maybe some of them are okay, but 99.9% of chat rooms are full of shit. They will somehow seem to work, but at the same time they won't. I mean, in general, how do they work? It's just basically market manipulation. The owner of the chat room is the one who's going to be making all the money. And the people, if they're in time, lucky to enter right when that alert came in, and that's already anyway too late, then maybe you might be lucky to make some money together with the dude who actually made the money, the owner of the chat room. So forget about this bullshit. Don't take shortcuts. Study, learn correct market analysis. Technical analysis, it does work, but a complicated, serious technical analysis, not some simple structures and patterns, and that's another thing. Along with Forex signals and chat rooms are those simple structures and patterns. They do not exist. Sometimes something might seem somehow similar, but when I'm trading, I have so many different technical rules, so many structures that I'm looking at. I'm analyzing the psychology behind the price movement and so on and so forth. If you're just looking at basically the structure, well, there is a hook like that, and then the price reversed, and then this is an entry point because I said so. What a bullshit. Forget about this. People want to believe this, that the trading is so simple, when in reality it's really not that simple. And the last tip for today's lesson, and that is keep demo trading until you see consistent profits. Forget about money trading if you watched a few YouTube videos and maybe you've even taken some short useless online course. Don't money trade, please. You are gonna waste your money. And even when for example, when I was learning from my mentor, he did not allow me to money trade in the process. And I really wanted to, because everybody wants to make a lot of money as fast as possible and buy whatever they want to buy. It's a struggle, I know, but spend time demo trading. And that is so important because you're gonna remove that unnecessary stress. Because trading psychology, actually there is such a term called trading psychology, is incredibly important. It's even, in my opinion, perhaps more important than technical aspects of trading. And if you start money trading right away with just some small amount of knowledge and no experience, you will be bound to lose that money, and that's normal. And when you do, your trading psychology will be damaged, and then you might actually run into other problems along the way. Maybe you will stop trading and then you will learn more, and then finally maybe you will paper trade. But once you again move to money, you might face difficulties. You might face psychological blocks in your head, and you might start making mistakes, and you might start trading even more impulsively. And I've been through that. I did have quite a few psychological issues in the beginning of my trading career, and those are unavoidable. And most of trading coaches who sell their courses, they sell some simple structures and patterns, but they don't even teach anything about trading psychology, and that's an incredibly important aspect. So do not trade with money. There is no difference if you're gonna lose 5,000 or 1,000 fake dollars and 1,000 or 5,000 real dollars. There is gonna be no difference really, but losing the real dollars will damage your psychology, and you might quit this job in the middle altogether completely. So you might just crack and say, you know what, forget it, I just hate this job and it's not for me, and blah blah. And a lot of people fail like this. There are so many day traders, especially day traders, who fail very fast. They don't take necessary precautions. They just disrespect basically trading psychology, or they have no idea about trading psychology and how to build that correct mentality and how to take this job seriously and develop step by step. This is incredibly important, guys. And once again, there are so many fake gurus that will sell you some cheap trading courses or maybe even expensive trading courses, and in the process, or actually they might even give them away for free, and they make money in a different way. They will make you open a money account with some broker, that a really nasty broker, that once you lose all that money, and of course you will lose that money because you don't know how to trade, that course that they give you for free or sold you for $100 is gonna make you lose money just super quick. And that's their business. And once you lose that money, broker keeps that money and then shares a really nice percentage of that money with the dude that taught you all the structures and patterns, and that's how they make money. And that's why they give away free trading courses, because that's not their business. Their business is to get a share of your losses later. Haha, I bet you didn't know this, or if you did, then you already know something about trading. That's very good. And me, when I'm teaching somebody to trade, I'm not allowing them to money trade. I mean, it's out of my control, but until you complete the learning program, until you know what the hell you're doing, until you see in your clean, proper trading statistics that you're making consistent profits for a few months, at least a few months, because a few weeks is not a good result. A few months at least, then you can start with a very small trading deposit with a really good, trustworthy broker. That's the best way to do it, and that's the safest way, and that's the only logical way to do it. Right, this lesson is coming to an end. I really hope that it was helpful, and I hope that you enjoyed it. If you did, please hit the like button and comment your thoughts. I'm very interested in finding out what you think. Maybe there are some specific aspects of trading you would like me to cover later after this challenge in other videos. And of course, please subscribe. There's going to be a lot more of them coming out. And since I'm just starting this YouTube channel thing, follow me on Instagram and send me direct messages with your trading related questions. I'm doing my best to answer all of those private questions, and if I'm not responding right away, just give me some time, because there are a lot of people that are messaging me. And once again, I'm running a lot of live webinars, so if you want to learn more about trading and my strategies and more technical and detailed things, then click the link below in the description and register for my free webinar. All right, thank you for watching, and I'll see you tomorrow in the next lesson.